Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So one of the things that tends to take new entrepreneurs by surprise is the difference between sales contracted and cash collected. So when we're talking about sales, we usually get all excited because we've made a sale. Somebody said yes to our thing. They said, yep, send me the agreement. Let's go. And then you don't hear from them for a minute and you go, wait a minute. I thought they were so excited and I can't seem to get a hold of them to pay their invoice or to make their deposit. They were so excited on the phone and now they're not opening my email where I send them a link to buy. What happened? So there's that end of it, which is the sales end. So they may have made a sale in theory, but they haven't actually collected any of the money. Secondarily, you can make a sale that involves a payment at a later date. Maybe they're making a deposit towards something in the future, or you're selling something on a payment plan and they're going to be making you multiple installments over time. Now, all of these are totally valid and totally happen in most businesses, but you have to understand that you actually have no power in your hands until the money's in your hands. And the money isn't in your hands until somebody actually pays you. So it's worth sometimes making a sacrifice. It's worth having policies. It's worth protecting those processes that help you collect that money faster and better. And I'm going to talk about that today. I think a lot of my clients, a lot of folks that I've spoken with in CFO On Demand and, generally through this podcast have struggled with, wait a minute, I'm making sales, but I'm not collecting the money. So people are saying yes to me and they're either ghosting me, which is a big problem, which means you should probably be putting that payment link on the phone and not hanging up until they pay. Or you're issuing these ideas of payment plans or a deposit now and pay me later. And suddenly they drop off. They stop paying. They get less enthusiastic over time. People will cool off over time in their enthusiasm for your product or service. So what you have to do is strike while it's warm. Now, what's going to happen is you put yourself at risk every time you wait for a payment or you allow someone to take longer to pay you. And that risk should come at a price. Now, this isn't called interest necessarily, but this is why payment plans will typically add up to, in total, more than the upfront price of a good or service. So if I was selling a coaching package for 3 months, I would say it's this much now, or it's this much plus $300 in total. Or if you want to pay over 3 months, or it's in 3 installments of whatever. So maybe it's, $500 or 3 installments of $200, something like that, 20% markup if you want to wait to pay. Now, I have my own thoughts on, whether or not payment plans should be offered all the time, how many installments and so on. But what I want to talk about is how you can accelerate that collection and do that a bit better. Number one is the deposit someone pays should always be at least 50% of the total price, in my opinion. Because what you want to do is have them show the commitment. If they're unwilling to pay you 50% up front, then maybe they have no intention of actually paying you. Or if they can't afford half of the price today, maybe it's something they shouldn't be buying. So maybe it's a good insight into their wallet a little bit on how shaky they are about putting 50% down today. And that should be a good indicator as to whether it's going to be collectible in the future. The other thing to keep in mind is that when you're sending out invoices, you don't want to mentally count that as a sale yet until the money comes in. You really don't. Even though someone says yes, I would celebrate the yes, but I wouldn't celebrate it as a sale. I wouldn't start adding it to my mental tally of how much money I've made, even if they seem super committed. You want to make sure you have cash in the bank before you start celebrating or before you start spending it, because a lot of people will spend committed cash and not actual cash. And that gets you in a little bit of trouble. So you want to make sure the cash has settled in the bank account before you go and invest in something new or you start spending that. Now, there is a practice that I personally believe in that will help you accelerate that cash collection. And that is really having accountability and someone in your team to monitor cash collection. And I like to dub this person the cash flow chief. I think that's kind of fun. But you don't need a dedicated full-time person. You don't even need this to be their role title. They could also just have this little name tag or little badge that also says, I'm the cash flow chief. It could be your operations manager. It could be your VA. It could be your accountant. It could be anybody. And you could say, hey, I want to make you my cash flow chief. And what that involves is I need you to monitor the invoices that are unpaid. I need you to follow up with those people. And we need to assess the likelihood that we're really going to collect all those funds that are sitting out there waiting in what's called accounts receivable. If you've heard this term in accounting before, is really just people owe us money and we need to collect it. So it's money that should be collectible for us from our customers who haven't paid yet. And that not necessarily that they're delinquent. Some people are just paying on installments that we've agreed on, but we're due to receive those funds at some point in the future. And that should be factored into your cash flow forecast. As you're going into the future, you should be looking at the pipeline of what's coming in based on what's already been committed and contracted. So there's contracted sales and there's collected sales. And here is another pro tip. You do not pay commissions on contracted sales. You pay commissions on collected sales whenever humanly possible. Because if you don't collect the money, but you're paying commissions to, say, salespeople or customer acquisition teams, if you're paying those people an acquisition commission, but the customer never actually pays you, then you're out money. You're losing money because you're paying them for making the sale, but you're not actually collecting the sale. So it should be based on a percentage of cash collected in my mind, because then you're aligning the cash you make and bring in to the cash you're paying out to your people. And also that means your team is now incentivized to finding good fit candidates as customers who are going to pay, who are truly going to pay. And now your team is incentivized also to collect those deposits up front and make sure they get paid because, hey, if the salesperson doesn't get paid until the customer pays, watch how fast your salespeople are now going to be like, so give me your credit card number. Let's get started and start running the numbers. But if they don't have any incentive to actually make sure you collect it because they're going to get paid anyway, then they're not going to go through the extra step and create barriers and resistance to the sale. Hey, real quick, are you learning anything in this episode that you think is share worthy? Well, if you could take a quick screenshot and share any of your biggest takeaways or quotes from this episode, post it to Instagram and make sure to tag me at Shannon K. Weinstein and at Keep What You Earn. Thank you so much for listening to the show. Let's dive back in. And you want to be checking on these accounts receivable reports. If you have a tool like Wave or QuickBooks, you can run a receivables report or an open invoice report and see what is outstanding. And what QuickBooks does is this thing called aging. So if you're not familiar with aging summaries, what it does is it ages the receivables based on a 0 to 30 day, 30 to 60 day, 60 to 90, and so on, and 90 plus. And it will tell you how old these receivables are. You should have a policy. If you have collections that are this far out, if you have it spread across the board where you have stuff that's over 30 or 60 or 90 days, you should have in your business a policy or procedure on how you handle each of those categories. So if somebody is 0 to 30 days overdue, now I'm not saying 0 to 30 days, you're going to get paid out. It could be overdue. So you want to be paying attention to, well, when is the due date? And be paying attention to how overdue they are. Now, you want to have in your agreement with your customer what happens if payment is overdue, and you should be able to enforce that. But if you have these items that are long standing and due, what are the ways that you can control that? So I'll give you some ideas. You want to have a first follow-up process from one party in your team that does an initial follow-up that's pretty standard. That's like, hey, by the way, nudge, reminder, you owe us money, and here's the invoice link again. You want to do that 1 or 2 times. Then probably elevate that to, we're going to cancel services or we're going to terminate work or whatever it is that you're doing where you're clearly probably not going to get paid. So you want to stop doing anything that's going to cost you any more money. So you're going to have to communicate well with this customer. And then what you also want to do is have a policy where at a certain point, you're going to engage your agreement or enforce it and possibly get your lawyer involved, depending on the degree of magnitude of how much is owed to you and how the situation is unfolding. But you want to make sure that you've got it really clear as to what your policy is handling each of these different categories, what type of communication you issue to them, And if you have questions on how to do this or really what's appropriate for your industry, number one, ask your peers, ask people who have been there before you who have done this. Number two is ask a lawyer, an accountant, an advisor on what they recommend that you put into your emails to ensure that you're getting good collections. And then the other thing is making sure that your agreement is super clear and you're getting this advice from a lawyer on your agreement that clearly states what the expectations are if an item is overdue. So you want to make sure that you're ensuring the most success for yourself in terms of collecting that money from your customers. Because at the end of the day, hopefully you won't even have this problem because you're going to be delivering your product or service with good quality to their satisfaction. There should be no problem with your customer paying you. But unfortunately, the truth is that a lot of customers are just going to try to find ways out of paying you, or they're going to defer this, or they're going to delete the emails, or they're just not going to see it and they're going to move on. And frankly, it sucks. It just sucks. But if you have a policy and procedure on how you handle this by standard and you're able to enforce that, it's going to make your life so much easier because you'll have the peace of mind of knowing exactly how to handle it. And of course, you're going to want to talk to your what I would call the cash flow chief to figure out a way to enhance collectability, to get feedback perhaps on the process and figure out what's going to work well. The other thing is you want to potentially give them the power, but you also want to be empowered to make decisions on certain collectability decisions of, for example, if somebody is well overdue, let's say they owe you $5,000 and they're over 3 months delinquent, like they're not going to pay you but you've already delivered your service. Now, again, having policies where you collect upfront is going to help avoid this altogether. But if you're in this situation and you know that they owe you some money, one thing you could do is say, hey, I know you owe me 5 grand. It seems like, we understand that people fall on tough times. We understand that there's some issues here. What if we offered you a flexible payment arrangement where we could do a payment installment plan? I mean, guys, the IRS does this. So why not you? Offer a payment installment plan or offer to say, hey, if you're willing to pay, say, 3,000 of that 5,000 right now, we'll be willing to wash away the other two. Why would you do this? Because 3 is better than 0. If somebody's going to avoid you and drag out and create more expenses for you, quite frankly, in the follow ups and more time investment, I would much rather get paid a guaranteed 3,000 now than roll the dice that I'm going to get paid 5,000 later as time goes on. Because in my opinion, it's only going to decrease the likelihood of collection over time. So sometimes you have to be willing to get what you can get for that agreement and then just move on. So having a way to evaluate when that should happen and having a really clear set of standards on how you execute that is going to be key. So if you're managing any type of cash flow where you are not getting paid up front, or it's not really as simple as a checkout counter where you go and buy your goods and check out, if you have a little bit of subjectivity in terms of how you collect your cash, then these are some really good tips for you. I would love to know either how you're applying this, any other questions you have about cash flow or processes on collecting cash better. If you can, message me on Instagram. I'm at Shannon K. Weinstein. I love finding out that you guys are listening to the show and that you're learning something new. I always appreciate the feedback from listeners. So if you're out there and you're learning something new from this show, let me know. I'll talk to you soon.